Morning, folks. Hope everyone's doing all right. Happy Monday. Hope everyone's had a decent weekend. So, really quick one actually for today because as Mondays go, it's pretty quiet on the day. It's like just a couple of charts really that I've got my eye on, and the week ahead in terms of scheduled data events. So, just a quick macro update. We have had less than decent numbers out of Japan on growth. Also, new home prices out of China. All of this will be on the morning read, and you guys can check that out on the Dome Capital main site. What's really interesting here is this sort of like mention on crude. We are being pressured again today, trading around what 91 handle. And this is because of the prospect of an increased supply coming out of OPEC, and there's talks of the Iran nuclear deal being revived, and that would then put on more supply on the market. Basically, in when we're worried about a recession and demand destruction going forward, that's one thing. So about 90, if you're asking me, oh, should I buy from this area here, I wouldn't be looking at longs, unless we get further down to test, this inflection area here, about 90.06s. If we do fail to hold around these levels here, I would think we might be looking at a retest of the 85, 87s, there and thereabouts. If this trend line here, we have had three tests down here, and this lines up in, around the 90 handle, that level as well I was talking about. So, it would be imperative for bulls to hold this level if this market were to hold up. So if we break this support trend line, it's a very real possibility a retest of 88s before going for the 86-ish sort of price point. So the Dixie is back above that trend line. Whether or not we remain above, that will be key today. I want to see where this closed today. We closed above 105 500s, and this could then propel bulls, giving them a bit more confidence, or just the market in general, in thinking where would this dollar go down the line, right? So that's one. Second, another chart that's very interesting, I feel, is this E-mini S&P futures, very clear technical levels, and it has played out so far. So retest of the 4200 handle, if we fail to hold that, then I would potentially be looking at the 4100 handle to then start massaging orders for that, longer term long before we test, these higher levels up here. But if it doesn't hold, then I wouldn't be too confident in that long in and around this area, especially if it's going to get messy depending on how the dollar reacts. So that's another point. One more chart that was actually quite interesting is this Aussie. Same thing. If we do get a test of this 7500s here, this handle here, we are trading around like a May, and yeah, pretty much every month this has been quite a this high over here is quite an inflection point. So turn back around. If we hold this level here, that would be a decent long, for that swing up that I was mentioning, I think about 2-3 weeks now. That's about it, and that's about it on technicals charts that I'm kind of finding interesting at the moment. I mean, this is an interesting chart, but I am not in the thinking about the euro and the eurozone in general. There's so many things that should go one way or the other, but hasn't really played out in that certain way or the traditional way because of what the dollar is doing, and its relationship, the really strong relationship the euro has with the dollar. So but if you do trade the euro and you do want to know, certain pitfalls, do get in touch with me on, Discord. Basically, we do have that, 1 month free trial, so do make use of that. What other things? So economic data. Today's going to be really quiet, but going into the week, things will start to ramp up. So on Tuesday, you'll get RBA meeting minutes, UK unemployment figures, and all these things. Everything is on the morning read, but the biggie might not see a lot of movement, more confirmation of where the Fed is sitting. So the FOMC minutes will be out, very late Wednesday in the UK and basically, and very early morning in Asia, so FOMC minutes. That would, because we have had surprising data last week showing that inflation might have hit peak. So if it has, that means, if this FOMC minutes is like super hawkish, so that might, spur further rally in equities, thinking, okay, they can't be as hawkish. So the DXY needs to come down, and this will be positive for risk assets. That's about it. Hope that was useful. This is Reed, bringing you the daily briefing. All right, remember, subscribe, like, hit that bell icon to be notified for future videos. Have a good session ahead and a great week ahead. Cheers.